Thank you and congratulations for having chosen this session. Private equity is not enough mentioned for its action on climate issue, while its contribution to the green shift of finance is crucial. This session will demonstrate what can be done by this industry. And I invite Dominique GAILLARD, CEO of Ardian and Chair of France Invest, the French Federation of Private Equity Professionals, to come on the stage and introduce his distinguished guests. The floor is yours.
Could I ask the other panelists to join the floor? Thank you. Wherever you want. Good afternoon, everybody. I'm very happy to be on this floor to introduce how PE can help greening the economy. I wrote that I was not surprised to see so many people attending the roundtable because of the importance of PE, but apparently you are not so many, so we are still going to show you that it's quite important that greening policy and climate change policies are implemented, in fact, for quite a long time in the investments of in the companies in which we invest. I think it's of critical importance, both on the social impact of social point of view, but also on a financial point of view. Since, as you know, we are also financial people, and so it's good to be able to demonstrate, and I think we'll do that this afternoon, that even though ESG policies and climate control policies some years ago were considered as a necessary but costly evil, now we can demonstrate through some of the expertise that some of the experiences that we have seen in the recent years that applying these policies, being quite involved in these, can also have a positive financial impact on the value that we create on companies and on the value that we can extract from these investments. But first, maybe a word on each of the panelists. So, Anette, if you want to begin with you.
Does this one work? My name is Anette EBERHARD, and I have recently joined a company called PKA AIP, which is kind of a fund-of-fund institution in Copenhagen, 100% owned by a Danish pension fund, also called PKA, which is basically taking care of 300,000 people from the healthcare sector. And we were established back in 2012, and we are now in our third program of investing. Thank you.
Sophie?
Thank you, Dominique. It's an honor to be with you today. My name is Sophie PATURLE. I am a co-founder and managing partner at Demeter. Demeter is a venture capital and a private equity company dedicated to energy and ecological transition, created 13 years ago. One of the pioneers and one of the major players in Europe. A few figures to give you a brief overview of what we do. We manage €1 billion with 35 professionals based in France, Spain, and Germany. We have partners for North America and Asia, and we have invested in 130 companies over the last 13 years, investing in startups, small and medium-sized companies, and also energy efficiency projects.
Andrée-Lise.
Andrée-Lise, METHOT, founder and managing partner at Cycle Capital. We are a manager with 6 funds under management, 1 in China, the rest in North America. We own an accelerator. Essentially, we are an impact investor dedicated to clean tech sector. We have over 350 million under management. I think I can say in few days, $500 million. We raised as a team 1.2 billion in equity for our companies in our portfolio last 5 years. And essentially, I will say we are the proof of impact investing. It's possible because our team, essentially based in North America and China, we speak over 13 different languages, between 23 and 62 from India, Russia, China, Canada, USA. It's a great chance we have, and a clear gender balance group. Half of our staff is female, and we have a clearly support by our ecosystem to grow this place for women in our team.
Thank you, Andrée-Lise. And now, Martin.
Yes. Good afternoon, everyone. My name is Martin SKANCKE. I am chair of the board of the Principles for Responsible Investment, which was founded now 12 years ago. We have about 2,000 signatories, asset owners, investment managers, and service providers in over 50 countries, managing in total over $80 trillion. So it's really been it is the dominant responsible investment organization in the world. I also have a couple of other hats that may or may not be relevant to this discussion. I'm on the board of Norfund, which is the Norwegian Development Finance Institution, and we do a lot of investments, not so much in the tech sector, but in renewable energy and private equity investments in emerging economies. I'm also on the board of Summa Equity, which is a PRI signatory and a private equity company with a, let's say, an investment framework centered on the Sustainable Development Goals. So lots of exciting opportunities in both tech companies and also in other sustainability solutions.
Thank you, Martin. Just a word myself. I'm Dominique Gaillard. I have two hats today. One is one of the founders of Ardian. Ardian is the largest alternative players in Europe with $75 billion under management, covering the full spectrum of private equity and now real estate. And we have at Ardian developed ESG policy for a long, long time already, and we can discuss about that later on. And my second hat is I'm the president of France Invest, which is the private equity association in France, regrouping nearly 500 members. And the France Invest has been really on the forefront of what has been done on ESG policies, and we'll comment on that later on. Maybe if we have a slide on the weight of, thank you, of private equity. I think these figures are important because that shows that if private equity members decide to be a catalyst on ESG policies and climate control policies, they have strong weight in influencing the global economy. If you look at these figures, you have three columns, the world, Europe and France. Let's concentrate on Europe maybe. Europe, it's nearly 100 billion euro fundraised in 2017. France is 16 billion out of that. And the amount invested is slightly less, 73 billion, 14.3 in France. But more importantly, look at the numbers of companies that we have invested in Europe, more than 7,000. In France, more than 2,000. I think in France, globally, over the last 15 years, we are still investors in 7,200 companies. So it's still a small portion of the companies of France, of course, but that shows that if we follow these ESG policies in our companies, we can have a very strong impact. I put also below some figures on the net job created in France over a period of 7 years, more than 300,000 net jobs created in the companies that we are investing in. It represents 8% of the total employees of the private sector. And we are growth providers in the company that we're investing with 40% of revenue growth between 2010 and 2016. Another word on maybe on the semantics before we open the panel. What does greening PE mean for me? For me, it's First, financing clean tech companies and promoting innovation and new and efficient clean tech technology. First point. Second point is supporting unlisted companies from all sectors towards reduce emissions and positive environmental and social impact. And third is creating and financing green infrastructure assets. Let me finally conclude this introduction by saying that at France Invest, we have a very strong and active ESG commission led by Candice Brunet, who is here. And we have, under the impulsion initially of our LPs, and maybe Annette, you can comment on that later on, and now it's a goal that we have established for ourselves independently. We have been strong promoters of E and S and G policies in the company that we're investing. And the last initiative that was taken 2 years ago by a group of French PE players was to launch the IC 2020 initiative Climat 2020, signed by 4 members at the beginning. I think that now the figures yesterday were 22, 23 members. And I heard that this morning the French Caisse des Dépôts, which is big public investors, decided that they will sign also this IC 2020 initiative. Now let me turn to Martin. France Invest and PAI have been working together for quite a long time now in the propagation of these ESG policies. Could we go now one step further and to consolidate on the advance that we have had on that?
So we are taking one step further. We have been working together on the IC20 project and been very impressed by what is happening. And we feel that it's time to take this globally. And from today, we are hosting this initiative on the PRI collaboration platform. And we're encouraging all our 2,000 signatories who feel this is relevant for them to join. So that means that taking this with initiative which started in France, we're now putting out on the global stage, and hopefully that can give even more momentum.
Thank you very much, Martin. I think that there will be a press release on that later today, or maybe earlier today. As PR represent the global investors community, what do you think, from your side of the view, what do you think investors are doing across the board to green their investments, and how can you help them to do so?
So we ask our signatories every year what is the single most important issue that they want us to work on. And for the last 3 or 4 years, the answer from them has been climate change. So this, I think, has many aspects for investors. One of them is understanding it in a risk perspective, but it's also, I think, understanding in an opportunity perspective. And we have, of the 2,000 signatories of the PRI, more than 800 have some form of investment in private equity. So this is actually concerning many, many signatories. And the private equity working groups have been, I'd say, some of the most vibrant working groups within the PRI. So there is a lot of experience and a lot of learning that we can bring together and disseminate. And I think also, actually, there is a lot for investors in listed equities to learn from the private equity sector. I think there are so many areas, particularly around governance, where there is a lot to learn from how the private equity industry are being good stewards of their investments. Of course, and I've worked a lot both with listed and private equity, but I really feel that the private equity industry has been really good at understanding the relationship between the owners and the managers of companies, and providing very clear steering and making sure that putting a lot of disciplinary pressure on the companies they invest in. And this is, the core of what good governance is about.
Andrée-Lise, you want to add something?
Yeah, I think it will be interesting for me to share the situation we have in our group today, because we are a signatory of PRI. We took the decision. We go for impact. but started very interesting discussion with our new LPs around the table, around our potential new fund. And now we put in place an impact committee to speak about ESG for VC. You can imagine that the majority of our company is run by men. Generally, it's 95% men. We are in tech. We are working with the guys based in the Valley. It's clearly a big challenge. And you can imagine the first time I had a conversation with a specialist about gallium nitride. Do you think it would be nice to have a harassment policy in your tech company? Say, what? And I think this thing can change something very important, because if you look, for example, the place of diversity, including people from different countries, women in the tech company, I'm sure the PRI approach or ESG approach will make the difference to include more people in this tech view.
Good. But let's go back to basics, Sophie, and maybe Andrée-Lise, please jump in if you want. How do you see the global clean tech market now today? How did it evolve over the last 10 years? How do you anticipate it will evolve in the next 10 years, Sophie?
Maybe we can have the figures to give us elements. To start, let me refer to what Bruno Le Maire told us 2 days ago. Awareness of climate energy has progressed. The financial sector must play the game. To answer Dominique's question, to my mind, venture capital and private equity have already started to play the game. But we are ready to accelerate if our LPs want to play the game with us. So the slide I'm about to present is very telling. It is broken down into 2 parts. On the right, at the upper on the right, you can see the amount invested by private equity investors globally all over the world. These figures are given by the Cleantech Group. And the amount invested in cleantech venture have greatly increased within the last 4 years, with 2 different periods. After a period of steady and solid growth from 2013 to 2016, we are now accelerating. We are witnessing a sharp acceleration because we invested 13 billion euros in 2016 and more than 18 billion dollars, sorry for that, in 2017. Why? I think the reasons are very clear, because opportunities have grown and because success stories creating value for the shareholders have shot up due to 2 reasons: a sharp decline in production costs due to innovation and volume. The best example is the cost of the solar energy. The cost of kilowatt hour in solar energy have been divided by more than 10 within the last 10 years. And also because of the heightened awareness of climate issues, as you have mentioned. The second part, at the bottom end of the slide, more bigger, the goal here is to show you how such amount of capital has been broken down by subcategories. I would like to flag 3 main trends. The first one is that mobility is clearly very attractive and is becoming the most attractive for the investors. It has risen very sharply. Investment in mobility has been multiplied by 5 over the last 4 years. Energy and power, the part of energy of power have declined, but the global amount has not declined. Huh? It's
relative.
It's a relative graph. That's right. Thank you, Dominique. And what we can see here is that the relay is taken by corporates and infrastructure funds in the renewable energy. And I think it's a perfect illustration of the role of private equity. Once private equity investment launch, and then when we have reached a certain maturity, strategic investors or infrastructure funds go on for the next steps. So if we can consider that the amount that we invest are not so high, if we consider the amount that we heard at the previous roundtable, we could consider that what we do is a drop in the bucket. But it's not the case, because it can trigger huge levels. And the third point is, I'd also draw your attention to the fact that agriculture and foodstuff are flourishing and will probably blossom in the coming years. It was said also this morning by Sylvie Goulard and Mr. Brokrasa from Morocco, and believe me, I'm quite sure of that.
These are global figures?
Yes, global. And French market is around 5% of the global figures, but the trends are the same.
Andrée-Lise, any comment on that?
Totally agree with Sophie, but if I look deeper in our deal flow, we are seeing around 600 qualified deal in clean tech, around A, B, C, D each year. And I will say we have clearly an acceleration in North America for ag tech. It's a very big topic. And the other one, it's clearly the presence of the AI, IoT business for green mining, manufacturing. I think this type of technology, it's a real breakthrough, will change totally the landscape. If I take one example, we have an application, it's a sensor application for shovel in the green mining, and we extend the life of one mine in British Columbia by 17 years. We change totally the profile of the net present value of the mine. And I think this type of technology will change the profile of the clean tech sector in the industrial market. And if I compare 10 years ago when I started my first fund, I cannot imagine this type of acceleration in a very tough and conservative sector like mining and ag. And that's what we are seeing. I think we focus a lot on transportation, logistics. It's a big thing with climate change, but something happened in the industrial world in parallel.
And these startups in ag tech, are they located only on the Silicon Valley, or are there a lot in Canada, in Europe?
Very interesting. We did a deal 4 years ago, Microbiome One, very interesting. It's a substitution to herbicide and pesticide. We did our last round of financing with TPG and Pontifax, but the best deal was in Canada. I think it's what we need to understand. It's a global market. A lot of things in the valley, a lot of club deals in the valley, big valuation in the valley, but interesting thing to do in New York, Montreal, Toronto, or Vancouver in North America.
Sophie and Andrée-Lise, I know that you have had an agreement several years ago to work together more closely. Still, I suppose it's because your way of investing is similar, your theses are similar, but do you see, and maybe you can, Annette, intervene in that, do you see differences of approach between Europe and North America on this clean tech world?
Perhaps I should just extend a little bit about the story of PKA. As I said, my company is 100% owned by PKA. And PKA, and not least their members, are very focused on doing investments that make a difference. You could also say they are very focused on ESG. Of course, they would like their pension funds to have a good return, but they are very focused on also on making investments that make a difference. And actually, they are not only talking, and they are not only proud member of the PRI, but they are also walking the talk, you could say. I can say that PKA in their portfolio have 5 offshore wind projects and 1 onshore wind farm. They have invested in solar and biomass. And what is, I think they are actually also very proud of is that they are one of the founding members of some kind of public-private partnership in Denmark. You might have heard about the Danish Climate Investment Fund that was established back in 2014, and they actually also was one of the founding partners of another public-private partnership called Danish Sustainable Development Goal Investment Fund this year. So they are really not only focusing on wind turbines and solar, but also on working in developing markets, emerging markets, because they know that climate is not only a local problem. We have to take care of the whole Earth in that perspective. So for now, that would be.
Andrée-Lise, you want to add something on that?
Yeah, I have a chance to fundraise in different markets, including Asia, for our different fund. And the big difference I'm seeing, it's not in the deal part, it's more on the LP side. And I will say, if I can say two things very different if I compare Europe and North America. In North America, actually, we have a lot of new family office, people who did a lot of money in the Valley or New York and Canada. Now they are ready to give something for climate change or for impact. And they are more and more sophisticated. I think the impact thesis, it's really important for family office in North America. But in Europe, what is really impressive for me, I had a chance to be with BNP Paribas this morning, and they have a clear view about ecological transition. You know, I can imagine this conversation in New York, for example, with a classic banker. I think it's one thing very interesting here in France. It's the fact they use the words our ecologists use in the street. And I'm very surprised of that. And I think it's a good thing. We need to follow that. And because if it's part of their vocabulary, it will be part of the way they will invest over the time. But our real challenge, and if we don't deliver returns with this type of approach, if we are just impact, in 10 years we are screwed. The real challenge, how we can make impact, what kind of tools we need to develop as a VC, if you compare with IT sector, and provide respectable returns to our investors. And I think it's the major challenge we have, but it's true in Europe, and it's true in Asia, and it's true in North America.
I totally agree with what Andrée just said. We have to combine perspective of high profitability and impact in terms of ecological.
I don't know if you noticed yesterday.
We noted both.
I think it was on Twitter. There was a group of I think of 24,000 students who launched a kind of a petition asking the companies in which they could be hired later on, what do you do for environmental issues? And if you do nothing, we will not apply to your company. So that will probably force the companies to be more greeny than they plan to do. So that's an interesting phenomenon that I saw recently. Sophie, I understand that you have won a mandate from the City of Paris to manage for them. I think it's a 200 million euro fund for clean tech. Could you comment on what's the focus of these funds? And
Sure. We're delighted to have been chosen, of course, after a rigorous selection process by Paris, because it's really a great initiative, totally unusual and very, very innovative. As you know, Paris is really ambitious on the climate agenda, and strongly committed to tackling climate change. So they decided to impulse an equity fund. I can briefly summarize the topics of fund. It's a fund very common in terms of strategy, in terms of performance expected, in terms of governance.
Of fees.
In terms of fees too. That's right. In terms also on carried interest, everything is common. And the objective is to impulse with only a small part. The objective of the fund is to raise 200 million euros. We have already finalized the first closing above 100 million euros. And Paris, we invest 15 million euros. So the idea is really to make to attract and to gather around this initiative financial investors, private financial investors, and also corporates that are interested in doing more for the climate. So we will have we have already NG, for example, Fayat in the building sector, because the objective, the strategy of this fund is to drive and to address the main problems that big cities will have to face and have already to face, which is buildings and energy efficiency of the buildings, the first one. The second one is mobility. It's not only people transports, but it's also delivery, every type of delivery, and also logistics. It's also air treatment. It's not too bad in Paris, but if we travel to Asia, we see that there is a big issue there. It's also waste, recycling, and of course we will use all the new technology and thanks to the digital, everything we can now put into massive allocation. Thank you very much. Mm-hmm. So the role of Paris is clear. It's to fuel big initiatives to address the problems of the big cities, to make them sustainable. It's to be also an initiative with the measurement of the impact. We're working with Carbon 4 to determine what is the real impact and what is in line with climate agenda of Paris. So the company can be from Paris, but can be also from Montreal. Okay, it will be mainly French allocation, but French, Europe, and a small part for Montreal.
That's a good transition maybe to a question I wanted to ask to you, Andrée-Lise and Anette. Did you see this kind of initiative elsewhere emanating from the cities, and would you recommend the cities to move in this direction to develop that?
I have not seen it in that way from cities, but I have, of course, seen how the city of Copenhagen are focusing very much on their environmental situation. But I think I would like to refer back to the public-private partnership that I was speaking about previously. I think when governments and, for instance, in Denmark, pension funds are working together to find solution on climate change, I think that's an illustration that we all have to be aware of, that we need different kinds of risk appetite to solve different kinds of investment risks. And I think with the public-private partnership from Denmark is one illustration or one way how to sort of encourage the climate change investments to go further in the front run. I could mention another example. I have previously been the CEO for the Danish Export Credit Agency, and for 5 years ago we were very much involved in wind turbine projects onshore all over Europe. We are EKF, the Danish Export Credit Agency, are no longer needed in the wind evolution in Europe. So I mean, it's kind of using different kinds of risk appetite to sort of maturing a new industry, and then the public sector can withdraw, and perhaps also even the pension funds, I don't know. But I mean, I think we have to look also at that kind of pathways for investments in this.
That's totally right. I see this phenomenon also in France. Andrée-Lise, you mentioned that for Cycle Capital, AgTech is quite a strong investment policy that you follow. why is the segment so attractive to you? Is it because it's bursting now? Because you expect returns from that? And what kind of business models are developed through the agtech company that you are investing in?
Okay, many reasons. I think this sector is clearly in transition. If you compare with others, it's a clearly more conservative sector, but they need to fix very difficult problem in the next 10, 20 years, first thing. The rhythm of the population just grow. It's incredible. We need to increase yield. We need to preserve soil. We need to preserve water. And the natural way we're doing things will not work for the next 20, 25 years. We focus a lot on climate change, but in reality, if we cannot preserve soil adequately and if we cannot provide the clear water, we'll have a big problem. The other thing, we have a shortage of protein in many places on Earth, including in Europe, and we need to fix that. And for that, we need to develop a really interesting breakthrough companies. I think about seeds. For example, in our portfolio, we have a seed company. It's not a GMO. It's no competition with food. And we produce biojet fuel. And the farmer will put more money in his pocket. He will preserve his soil when he cannot put anything else on his soil. And we decrease by 100% greenhouse gas emission. I think this type of technology will change totally the profile of the agtech sector. And why it's so important is the fact, actually, a lot of farmers are really poor. They need more money. It's true in Africa. And we need to make sure the way we will build the next agtech sector or the next agricultural field needs to be in with a clear view about not just about the next 5 years or 10 years, but we need to preserve for 50 years. We need to fix the nitrogen thing. We need to fix the herbicide. We need to fix the quality of life of workers in the field. And for that, clean tech is clearly part of the solution. And I think this sector is really ready to take this. If I look who are the big players in the market, BlackRock, TPG, and others, big private equity are there. And they were in the energy sector before, and now they are really present in the agtech sector.
So to follow all these investment opportunities, you have to spend your time fundraising to raise big funds to have the capacity to invest all in these companies?
No. I think we are more clean tech, very transversal way to see things. But we can have certain focus on specific fund. But one thing I want to share with you, and I think it's very important, part of our work, it's create value and maintain value in our companies, in our portfolio. And one of the principal value in VC and PE is clearly intellectual property. And we did an extensive study last year about who own what in terms of IP in the world in clean tech. And we found something a little bit scary. 92% of the patents or family patents in the world is owned by a Chinese entity in the agtech sector.
But that's also because Chinese chemicals and agricultural companies have been buying big European companies.
No. It's a clear production in their lab, in their university. We need to be very prudent. If you look the score of the France, for example, or Canada and US, I'm really disappointed because we are doing a lot of research, but we don't translate that properly in real commercial opportunities.
Martin, do you think that the PRI works enough on the clean techs, and how do you work specifically to help the investors on this particular field?
You should never say that you do enough, because there's always more things to do. In general, the approach of the PRI is to try to collect good practices from among our 2,000 signatories, put it into a useful form in the form of case studies, and then bring it back to the signatories. And so really to share experiences and to make it as practical as possible. I think there's a lot of sort of high-level thinking going on, but we need the practical case studies. And so we're doing this in various areas of private equity, as we're doing across the board in other asset classes. So I think that's sort of our ambition. Our ambition is not to be experts in every area, because the experts are with the signatories, but it is rather to help share these experiences between the signatory group. But we are also doing some more sort of policy-oriented work, and just talking about this public-private partnership, which is important. So as we speak, there is the G20 summit in Argentina, and so there is a sustainable finance study group there, which is actually devoting time to exactly this topic of clean tech. And so the PRI has been engaged a little bit in the preparations and working with the IFC to produce a report for the G20 Sustainable Finance Study Group. And so that outlines some of the, let's say, policy implications of all of this. So I think we can play a useful role at that level, but I think what our signatories maybe find most useful sort of day to day is maybe the more practical, tangible stuff. I could also mention that we've had, we tried to convene, when we had our annual meeting in San Francisco in September this year, we tried to convene, partly because we were in San Francisco, so where we had a workshop on this, bringing together sort of the accelerators, the incubators, tech companies, venture capitalists, to discuss this investment landscape and sort of what kind of opportunities LPs see and what kind of obstacles they see. And so this is a conversation that I think we found useful, and I think the participants found useful. Next year, our annual meeting is here in Paris. It'll be the
Good
biggest.
choice.
It will be the biggest event we've ever had, and I think that we plan to build on that conversation when we meet in Paris next year. So I think there'll be some opportunities to discuss that whole issue with many people around the table, from LPs and from GPs and the rest of the industry.
Thank you. Maybe we could concentrate now 5 minutes on what I think is an historical phenomenon. My view is that LPs, investors in funds, have been quite instrumental in anticipating ESG issues and promoting these ESG issues in the funds in which they invest. From my fundraising period, I've always been struck by the fact that Norway, Denmark, Sweden, Netherlands were the countries where LPs, investors, were the most conscious about the necessity to have and the criticity of having ESG policies being followed by the GPs that they were accompanying. Do you agree with that, Anette?
I think it's very hard for me to answer because I mean I've lived in that circumstance.
But you travel a lot, so maybe you know.
Yeah, I do. I think the reason why you see the Nordic or the Northern European LPs focusing very much on not only ESG but also on climate change and things like that is that actually I think our politicians were very advanced back in the 70s when we had the first oil crisis, and they were focusing already then on the sort of problems of not taking care of the oil crisis, but not least on the climate change that would follow. So I think actually for many Northern European people, we were kind of born with it. And I think what we might be proud of is that we continue to put an effort on climate change, even though we've done a lot in our own backyard, but we also try to do more things around the world. And that's, I think, the background is, I mean, kind of political from back then, but I feel that we will continue to see lots of focus from our investors, and that's also why I mentioned that the members of the PKA pension fund are very, very focused on their money being invested in a climate-friendly way, and they also want the ESG in a broader sense to be sort of focused on. It's not only climate change, it is also I think they've focused on 7 of the Sustainable Development Goals. So they've asked us all to focus on that kind of thing. And I think, for me, it's natural, but I can hear from others it's not that.
Not so natural.
Yeah.
Martin, you wanted to add something?
Yeah, just to say that it is true that there are some LPs who are very, very committed and are driving a lot of this through sort of their demand, but it's not just in Northern Europe. And I think there are some interesting developments in other parts of the world. Just mentioned one of them, the obvious one to mention maybe, GPIF in Japan, saying that they're moving into alternatives. They have a very ambitious ESG agenda in general. The CIO was here a couple of days ago and spoke, Hiro Misuni, and he's on the PRI board, very committed to the Sustainable Development Goals and to ESG integration. So I think it's a false impression that it's only a few investors in Northern Europe, and I've been involved a little bit with fundraising for a fund based on the Sustainable Development Goals. And there has been broad interest also from North American investors. For instance, many of the university endowments are interested in these types of issues, and so I think it is a bit broader than that.
No, I think it's clear now that French LPs, Spanish LPs, all over the world, they are now quite conscious about that impose on us, if we are not ready enough, new rules, new reporting, new commitments. But Annette, do you see an evolution from today, or do you ask more commitments to enlarge commitments to your GPs, or?
I don't think I see sort of a large change or bigger change, but what we see is that we gradually, continuously work with our GPs in order to make them aware that this is what we expect from you. We expect from you that you are responsible in the way you run your businesses. And I think that has been a gradually sort of movement for many years. And I think what is important is that you are transparent of your requirements and that you sort of follow up. It's not enough to just talk in the beginning. You have to continue the dialogue with your GPs through the investment period.
For example, speaking about my personal experience, when we began to make the ESG reports on the companies in which we invest, at the beginning, we were supposed to make a picture of where these companies were, but without any requirements to help them to improve. Now we have taken commitments that every 6 months in our semi-annual reports, we have an auditor checking, going into each of the companies in which we invest and demonstrating, trying to demonstrate that on all the items that have been initially identified where we could improve or they could improve, there is an improvement, a regular improvement. And this IC20 initiative on which we are going to measure the carbon dioxide emission, I'm suspecting that 1 year or 2 years from now, we'll be forced also to show that not only we calculate the emission, but we have implemented measures to reduce it. So I suspect it will come, if it doesn't come from us, it will come from the investors in our funds.
If I may, just one comment. One dynamic we have in our platform is the fact we have different type of investors. We have classic institutional pension fund, corporate investors, family office, big angels. And what is really interesting now is we have a conversation between them around the table, because the impact investor try to influence others, including corporate ventures, to say, will be interesting for you guys to have a better perspective on ESG. And I think this conversation, it's really important, because investors like you, LPs like you, needs to contaminate others to make sure we have a common view about what we need to execute in terms of ESG in our company.
Martin, don't you think that ultimately, going one step further, we need to have some kind of collaborative work on best practice from LPs to GPs, from GPs to LPs?
Absolutely, and this is what we're doing. Just thinking about the work that we did on the DDQs and how that has been, after a while came into the ILPA framework. So I think it's sort of, it has to be based on practical experiences, and so that is what we're trying to do. I think also in a broader context, thinking about the relationship between sort of private equity and listed equity, that in many ways the private equity sector is so important because it's funding a lot of the newer startups, particularly in the venture space that you need, and a lot of the innovation in the economy is coming from there. So I think there is a huge benefit to the economy as a whole of having a vibrant private equity sector, because you address some of the inherent principal agent problems, corporate governance problems that are in larger listed companies, and there is a funding for the new ideas and the innovations that we need to tackle, for instance, the climate issue. But the listed markets are important as exit strategies for these companies as well. So I think we need both, and I think that's an important sort of message. I think that in a vibrant economy, we need this. And just thinking about this IPCC's 1.5 degree report that came recently, which is really, really critical, and it describes, in very clear, gives a very clear picture of what is needed. And in most of these pathways to a low carbon economy, we have just assumed that there will be lots of new technology. We're just hoping for new technology, but the reality on the ground is that this new technology have to be created by companies, and these companies need investors. So I think this is part of a much, much bigger picture.
I understand. Sophie, I think now we are all agreeing that we have a nice but constant pressure from LPs to push GPs to respect and to implement these ESG policies. On the reverse, on the opposite, do you think that GPs could help LPs to make the good choices in directing them towards the good GPs?
Thank you for this very good question.
You can promote your fund if you want.
Yes, no, but we have worked around an initiative launched by public sector with France Invest and GPs together, and we worked on establishing a reference framework that we called Ecological and Energy Transition Label for Climate, validated by auditors like Ernst & Young, Novetic. And the purpose is clearly to help LPs, institutional investors or corporates, caring for sustainability, for the climate fight and global warming, and they want to allocate assets to funds that support companies or projects acting against climate change. And I think it's a real, we need to promote tools to help them to allocate asset towards climate, towards
coming back to what I was saying that, as an introduction, I think what is good now is that we have some examples of where we have been quite active in developing low carbon emission policies, implementing ESG policies. Now it begins to pay back to the investors, because as you were saying, Annette, if finally, or Andrée-Lise, if the returns are not there at the end, then we are screwed. Let me give you one example, an Ardian example. Through our infrastructure fund, we invested in Luton. I think it was in 2014, Luton Airport, with an industrial group, the AENA group, a Spanish group of airports. And Luton was not the best player on these aspects. Clearly, it was very far away from London. The connections, the train connection was very poor. It was very noisy. There were a lot of things to be done. And what we implemented, of course, with the help of the management of the Luton airports, we incentivized the fleet modernization of aircraft. which were less carbon intensive. We worked on initiatives to reduce carbon intensity, like changing lighting in LED lights. We had only electrical vehicles for handling merchandise, and so forth. And also we agreed with the Luton Council Borough to build a people mover system that was more efficient than the one that was in place. We also improved the HR policy, reducing gender pay gap, and so forth. Ultimately, there was an acceptance of Luton Airport in the local community, which was such that investors who bought back our shares, ultimately, they kind of quantified the kind of good image that we had with our surroundings. You know that sometimes airports are not well welcomed by the inhabitants surrounding the airports, and in this case, we had a good acceptance by the social environment. And ultimately, we sold the company, and our investment, we made 4.2 times the money. For an infrastructure fund, it's quite significant. And we try to quantify the impact of the improvement of financial result and the impact on the improvement of ESG policies. And what we found is that 2.5 times the money was linked to the fact that the EBITDA improved, and so we are quite happy with that. The rest, to go to 4.1 times the EBITDA, times the money, was only linked to this global sympathetic environment that we have built thanks to these low carbon emission initiatives. So I think for us, we want to have more and more examples of that, because ultimately we have to convince managers of funds that ultimately ESG policy is not costly, is providing returns, and so they will be the first promoters of implementing these policies. Now that I hope we have convinced you that we people, PE people, we are the most efficient partners to help companies to go to low carbon ESG companies, will that drive you as an LP to change your allocation policy to give us GPs more money to invest? Maybe
it's a good question.
Good question, huh? And maybe being less towards less listed assets, but more towards private equity assets, because we are more active in implementing these ESG policies. Is that taken into account in your global allocations in pension funds?
I think if we take the perspective of the pension funds, I think that's the easiest and clearest way to explain it. I think pension funds have very long tenors when they invest, and they of course, or we of course, expect the companies that we invest in to give good returns. And since I clearly see a tendency towards climate change avoidance in many companies, and I also not least see that the societies around us expect us to behave in a climate friendly way. So of course we would be very focused to invest our money in LPs and GPs that are focused on the climate change avoidance in the future, because that's the way we have the best return. As you said previously, it's not enough to make an impact. We also have to create returns, and I think in the long run, returns will come from these companies aware of climate change.
And so, Andrée-Lise and Sophie, do you see tons of money going directly into your funds because of this adequate positioning? Sophie?
I would say I think it's time to invest in green business now, because over the last 3 years, green business, I would say, has dramatically changed. And it's not only because of the substantial mindset change from citizen to politicals to corporate and financial community, but it's also because new environment-friendly technologies are competitive now. I think it's a key issue. Now, the green technologies are becoming competitive. And the strategic investor and the corporates have entered the game, which is key. If we consider the renewable energy, We have seen over the last 2 or 3 years, SolarDirect bought by Engie, Quadron bought by Direct Energy, bought by Total, Longa Solar bought by Engie, and Neoen now listed. It was 1 month ago. It was a great success, and we all see how the markets are not in a very good mood currently. So I think today, as the perspectives are very different, it's the right time to enter. And I will recommend to the LPs, when reviewing asset allocations and due diligence, just to see what has happened over the last 3 years, and not as a regular do, to study the track record over the last 5 to 10 period, because it's not possible to compare. And I consider that now what is key is experience. So if I could say something, everything has fundamentally changed. So look at the experience, look at the recent track record, and change your way of considering your allocation of
Andrée-Lise,
assets.
are you so optimistic?
Bit different. I agree with Sophie with the fact that change.
You always agree with Sophie anyway, so.
Change a little bit, but I think if we look on the macro way, it's clearly time for vision. People have a very incredible vision. Politician, big declaration, big guys in the pension fund. They are clearly committed to doing something. The challenge we have, it's tough to make real success in this sector. Took us a lot of time to have a great success. And the problem we have is the execution. And in my point of view, vision without clear execution in this sector, it's just an hallucination. And I think it's potentially what will happen if we don't work very well with the public-private sector. We have a ton of subsidies in clean tech, but I'm not sure it gives us a lot of success. A lot of spray and pray approach like in IT, and I think it's not the right thing to do. I'm not sure the classic plain vanilla structure for VC in clean tech is the right thing to do. I negotiate a new fund and I put 12 years plus 2 years on the table. And it was really tough to discuss about that because it's about IRR at the end and how you will place your management fees and how you will change the hurdle rate for the team if you want to have a committed team. Yeah. And we need to have this type of conversation around the execution. And I'm not sure we are there.
Mm-hmm. And how long are you going to wait to have some carried interest also?
Yeah, because certainly people, we are, in VC in general, we have talented people, financial people, engineer. We can have a great life in a corporate place, but dedicated our time 24 hours to build success for others, we need certainly to be supported, not just by the vision, by a clear execution by LPs in our fund. I think it's one of our challenge today.
I'm taking back my hat of President of France Invest, and I'm a great promoter of trying to convince LPs to allocate part of their assets that they want to devote to private equity or to infrastructure to long-term funds, 15 years of fund. And we all know that the classical model is 10 years plus 1 plus 1, which in some cases is just not adequate to the duration necessary to develop the business model. So, and I think that the dictature of the IRR is less strong than it was in the past. And so I discuss with a lot of LPs that now accept the fact that making a good multiple but lower IRR because we keep the asset for 7, 8, 9 years is as meaningful as making a quick flip on an asset that you keep only 2 years and that you have a wonderful IRR. So I'm fully in line with you that it is a necessity. Not 100%, of course, but part of the allocation towards longer fund, that's certainly something that will help, especially in this field.
And if I may, I think one of the other trap we have in front of us, I saw many groups, and it's true for GP and LPs, it's not just LPs' behavior, it's GP's behavior too. Our temptation, it's make greenwashing, doing IT, say it's green, and never try to do something in the industrial world. And I think if we want to change the way we produce things, and if we want to make this revolution in terms of green tech, it's not to just have a software. It's something in the industrial world. And the temptation is to say, I'm doing clean tech as an LP or GP, and not doing nothing in terms of production and industrial. And we need to do something there, because the real pollution comes from transportation and industrialization and energy, not from software. And we need to fix it.
I see the time running up, so maybe good timing to make some kind of a wrap-up. Any recommendation, additional recommendation that you will make, either to GPs or to LPs, to go one step further into the greening of the PE industry? I don't know, Martin?
Maybe one topic we haven't touched on, but so I was a member of this task force on climate-related financial disclosures, and one of the things that we introduced there was the concept of stress testing of business models, and asking about how robust is your business model if we're successful in reaching our climate targets. Now, in principle, that's a kind of framework that you could use generally for any sustainable development goal. You could ask, well, in a world where we have met the sustainable development goals, how will you make money with the business model you have today? If you're in the garment sector, how will you make money if everyone earns a living wage? If you're in the fisheries sector, how will you make money if we have a sustainable management of our fish resources, et cetera, et cetera? And I think this is an important test of the business case also for private equity, and it's a useful conversation to have, I think, because it provides a link between this broader sustainability agenda and the corporate strategy. And I think that sort of, that is where we can find sort of some common ground, and where we can make the sustainable development goals investor relevant, because we need to look at how resilient business strategies are. And I think this is also thinking about the time horizon issue that you raised, which I agree with. But when we're making an investment in a sustainable development in the PE fund, based on the sustainable development framework, we're thinking, well, maybe we'll be holding this, so suppose we'll be holding this asset for 6 years and selling it. In likelihood, half of the assets are probably sold to another PE fund. But they will be thinking how they can sell it 6 years from then. So in reality, we have to think about, well, how will they in 6 years perceive the value of this investment? But they will be counting 6 years ahead. Well, guess what? That's 12 years from now. That's 2030. That's when we should have met the Sustainable Development Goals. So the fact is that the Sustainable Development Goals are relevant to business stress testing today. And you have to think about how it will affect your exits. And the exits are determined by what the next buyer sees for exit opportunities further down the road. So I think this idea of stress testing business cases against the outcomes that we want, either it's a climate target or it's a sustainable development goal, is a way of making sure that your business is aligned with broader societal interests, which I think the beneficiaries are asking about, but also from a purely business point of view, thinking about what kind of regulatory headwinds you'll be facing if you're investing in a way which is totally contrary to the stated objective of politicians.
Any of you want to add something? No, thank you. So we'll have time for questions. Maybe I can make a conclusion, which is this one. I think that ESG and climate change policies in PE investing has never been, and is not today, the cherry of the cake on top of the financial performances. For me now, we are at a stage where it is a cornerstone element of the financial performances. And so I think that we are in a very good dynamic and alignment of interests all over the chain, from companies to GPs, from GPs to LPs and institutional investors, to promote, to push for these policies. And I'm quite optimistic that the next year, when we'll meet again, we'll see a substantial progress being made in this direction. if you are not totally asleep, we'll be quite happy to take one or two questions. Yes, madam.
My name is Luciane Moes. I'm from Brazil. I'm a PRI signatory as Sustainable Inclusive Solutions, my company.
Congratulations.
As a service provider. And I recently became aware of PACTA, the new tool developed by 2 Degrees Initiative that PRI is talking about to its signatories. And I was a little bit disappointed to notice that deforestation risks were not included at all at this point. And since deforestation also is a very relevant factor for climate change and for biodiversity, and I would like to know, I know there are parallel initiatives that Daniele Carreira is conducting, for example, but I would like to know future plans in terms of portfolio risks in considering agriculture, that's a relevant sector for most economies in the world. That's it.
Martin?
Yeah, thank you for that.
Easy one, huh?
Yeah, that was easy. No, you're quite right. I mean, this is a sort of a first generation tool that was provided for free to start a discussion, and I think it is very rudimentary. I mean, it does not contain absolutely every relevant element, but I think it's a good starting place, at least for a discussion on stress testing methodologies. There are many other tools available out there on a commercial basis and some of them are probably more advanced or more granular and can be used for more specific purposes depending on investment strategies. But what I think is important is to have a tool that gives you a coherent framework to address these issues and try to stress test investment strategies under a set of coherent assumptions that are aligned with a 2-degree scenario. I think that the problem in practice is that we routinely talk about a 2-degree scenario as if there was only one, but there are in principle an infinite number of scenarios that can take you to 2 degrees depending on what you believe about, for instance, the issues we've been discussing today, the speed of technology change. And so I think it's the whole point of a scenario analysis is in a sense to cast the wide net and to show a representative number of possible outcomes to better enhance the decision making. But this is something that we'll clearly work more on, and I think we will consult with our signatories about what they see as a need, and we'll try to respond to those needs. But we're not a service provider, so we will not provide lots of tools for us. There should be room for innovation in the private sector and people to develop these tools on a commercial basis.
Madame, over there.
So this question is for Andrée-Lise. I'm Marilyn Waite with the Hewlett Foundation, so an LP in a few funds. My question is around what you previously mentioned about the 12-year fund receiving pushback from some LPs and their focus on IRR, whereas I think for us we focus more on MOIC and some other metrics. And I have participated in some 15-year funds. I'm wondering if you give more flavor to what kinds of LPs are more likely.
You are fundraising right now?
No, I give money, I don't receive. What kinds of LPs do you see as being resistant to longer-term horizons when you pitch a longer-term fund where hardware tech takes a longer time to return?
I will say it's not a type of LPs, but it's more culture in different LPs. You have pension funds, they are really open for this type of discussion. You have other pension funds, they are not. You have fund of fund are really open for this type of discussion, and other not. And I think it's more about an ecosystem. I think we are in a transition mode with LPs and GPs on this question. We just need to have an open conversation with them. And the best way is bring good example. And I think if you have this opening, with your GPs, I think it will be very interesting for the community and for the ecosystem if you can publish a white paper on this, and we can say someone somewhere did it, and they are really happy with the returns, and it's possible to build on it. Because our work is so private, okay? As you know, a conversation between GPs and LPs, it's always very private conversation. But if we have case, and if we can make the case in different conference and publish a white paper about we can do something different because we are an impact investor, because we're an LP impact LPs, I think we can build an ecosystem very robust for this type of investment. And I will say, depends, probably the economic cycle change a little bit the perspective. If I think about pension fund, for example, if we are in the economic cycle very tough and they don't have a lot of money to allocate it and they are struggle with the retirement of their members, it's another conversation. I think we need to understand the macroscopic element and the ecosystemic element we can change over the time with the best example.
Could I ask two things? First is that we saw, not in the clean tech world, but we saw in the LBO world, funds now that have been raised with this 15 years long period. And the main LPs that were in these funds were endowment, US endowments, and Canadian pension funds. Canadian pension funds, as some of you may know, they also invest direct now in companies, and they always mentioned that they can save for longer times in direct investments, so they can also stay a longer time in funds. That's the first element. Second element is, I fully agree with you, Andrée-Lise, we need some data that show that returns on money invested are good, and Cambridge Associates will one day, which is the service company that provides a lot of data and performances of funds all over the world. I'm pretty sure that one day they will have a specific classification for long-term funds on which they will compare data coming from all their fundraising activity. So someday we will have the data that we need to sustain this policy of investing in longer-term fund. One last question? No. Yes. Here. If you speak very loud, maybe. Madame ici.
So I'm Marie Mebori. I work at Société Générale in a newly created team, Impact-Based Finance, and then our roadmap is to find new solutions to the funding gap, the 2.5 trillion funding gap for the SDGs. And the way we want to do that is see how we can help our clients use digitalization and the fourth industrial revolution to rethink their business models and achieve more impact, which we believe are the core value for any enterprise, be it in fintech, clean tech, or whatever. So what we have found, in the research which we've co-authored and published earlier this week with the UNEP-FI Positive Impact Finance Initiative, is that on this 2.5 trillion funding gap for the SDGs, over 80% of it is in emerging markets, in low middle income countries, and half of it, 1.3 trillion, is in Africa. So my question to you, after this long introduction, is what is the part of your business that is focusing on low middle income countries and Africa, and how do you, in your vision, in the strategic plans when you're buying or investing in a company, how do you project the growth of those business into those regions where most of the infrastructure and growth is going to happen as a result of growth of population in the coming years?
Yes, Anette, please.
I think I should try to avoid to repeat myself, but the way we do it at PKA and actually at PKA AIP is that we have decided to invest alongside with other Danish pension funds in this public-private partnership where we can sort of share the risk of investing in emerging markets being it in Africa or Latin America or other places. Actually, I forgot one fund that we are also invested in. It's called the Africa Fund, set up by a former Maersk team that is actually focusing on infrastructure projects in Africa. So actually, you could say that PKA and other Danish pension funds are trying to support the SDG goals in emerging markets via these funds, where the government are supporting the projects with, you could say, extra risk appetite in the funds.
Thank you. I think that we are running late, so Pierre, I will let you switch over to the next round table.